Well, good morning, everybody, and welcome to Gulf Intelligence Daily Energy Markets live video podcast on Wednesday, the 20th of April. I'm Frank Kane, standing in today for Sean Evers. On the basis of the news yesterday, it looks like we are officially in stagflation mode. The IMF cut its growth forecast for the rest of the year. The fund says economic growth will be 3.6% globally this year, down from 6.1% in 21. Of course, we all know the reason why, the war in Ukraine. They also mark in a 15% contraction in Russia. On the inflation side, inflation will be above 7% in the US, 5.3% in Europe, the IMF says. Oil reacted to this quite dramatically yesterday, falling significantly, but has recovered today to around $108. In war news, and it seems to be all about war news these days, Russian attacks in the Donbass have been repulsed by the Ukrainians, according to most reports, but we still await the big offensive there. But let's begin on the demand side. And go first of all to Victor Yang in Guangzhou, China, senior editor, JLC Network Technology. Victor, hello.
Hello, good morning.
Now, on the demand side, we have seen some reports that Shanghai is making some tentative steps towards opening up again.
Yes.
But there are also stories that a big steel making hub in Tangshan near Beijing locked down at least partially yesterday for a mass testing program. So tell me, what's the feeling on the ground? Where are we in China's zero COVID policy?
Well, we could say demand is still far away from full recovery. And it's not just Shanghai, but also some other places too, where new cases have been found, say like in Guangzhou. Well, about 20 cases were found on a daily basis, well, for a few days, well, and they closed some businesses such as cinemas, well, and even schools for a few days now. And they're going to open up.
That's where you are, Victor.
Yes, but in different districts, in different districts, and they found, say, about 20 cases in the Baiyun district in Guangzhou. So they closed this district down for a few days and shut down some businesses, including cinemas and, well, sports stadiums, well, and schools. And they are now opening up too. But if some new cases are found in a city, say, or district, they will, say, lock down the district or some area as well. Well, if it's just one or two cases, maybe it's not the whole district, but there will be testing and some business might be locked down. So this kind of impact is taking place in many places, not just in Shanghai, but Shanghai is a particularly serious issue. And the vice mayor of Shanghai just came out and apologized again yesterday. Actually, the Shanghai government has apologized many times recently for not doing well in this handling of the crisis. It was ill prepared, and it admitted that it was ill prepared, and it had kind of shortcomings in the handling of this crisis. Well, shortcoming would be kind of understatement, I would say. Well, it could have done a lot better because, it's over 2 years from the outbreak of the Wuhan outbreak now. And the Wuhan outbreak, when Wuhan was locked down, things were not that bad, were not that negative. It's more negative than the Wuhan lockdown now, not just from the outside world, but also from the inside world, from inside the country.
It's more severe than the initial reaction in Wuhan.
Yes, we could say that. Because of the local government, I would say, because of the Shanghai government, it didn't handle this properly. Well, at the beginning, or maybe the local government didn't take it seriously, maybe, and it was not prepared well. And so there was quite some issues, quite a lot of complaints, lodged to the government. So the government apologized many times and promised to make improvement. And this demand destruction, message impact on demand will last for at least weeks to come, and before recovery is taking place. Before significant recovery taking place,
Tell me, interesting that the authorities feel the need to apologize. Is that because there is a popular groundswell of resentment against the authorities for the actions that have been taken?
Well, you could say that some resentment, from the citizens, against the local government, not the central government, because of their mismanagement of the crisis. And say at the beginning, maybe it was taking something, it was not taking the seriously enough, maybe at the beginning. So they were caught short-handed. And that's a lot of problems ensue. Say, people were taken to quarantine without good preparation. Say, some people might have been negative, might turn negative before they were taken into quarantine because of short-handed problem.
Okay, I get it.
And there's some other issues too. So there are a lot of complaints when the local city.
Okay, and tell me, what is the visible effect on demand? Are people still driving? Are they still traveling?
Not much yet. Say if you want to travel across cities or across provinces, you need to have nuclear test testament. You need to be you need to prove that you are negative.
Okay.
And so a lot of restrictions. And unless you had to travel on business, you do the nuclear acid test, so you can get travel. But travel has been far below normal levels, and this is not recovering yet.
Okay. Let's move over to the supply side and speak to Ole Hansen, who is head of commodity strategy at Saxo Bank in Copenhagen, in Denmark. Ole, hello. Let me, on the supply side, doubts over supply have pushed oil and gas prices to unprecedented levels. It now looks as though we are safely going to remain above the $100 level for oil, and we'll probably stay around 110 or something like that. But from your European vantage point, the accepted view is that Europe will organize some kind of boycott of Russian oil in the sort of near future. But gas is a very much more difficult issue, isn't it? Tell me how it looks from there in Denmark.
Well, what we're seeing so far is families across the country, they're putting up a fight against Putin by turning down the thermostats. So people are trying to do what they can. Prices have not reached levels yet where we are seeing a demand destruction on a massive scale, but it is starting to impact. Recently, the diesel surge in diesel price we saw just recently, and then obviously the fuel products are the key here, because we are major importers of fuel products from Russia. So diesel prices in Europe are extremely high right now, more or less at par with gasoline. And these levels have started to negatively impact some industries. We are now paying Norwegian prices for cucumbers in Denmark. That's I would not have thought that would ever happen. They are probably the world's most expensive, but now we're also paying very high prices for locally produced, because obviously until the sun really shines through, we need to use heating.
So is that your kind of yardstick, the price of Norwegian cucumbers? Is it?
Well, it wasn't until recently. Once I had a bit of a shock when I saw the price that they have reached, because that's normally something you don't. And that's I think that's a general thing that we're seeing across the world right now. Items that we just take for granted, and suddenly prices are moving to levels where you take note. And I think Europe is right at the epicenter of this. Obviously, it's a wealthy area, so we can probably withstand it. But just this morning, we saw producer price in Germany rise again above 30% on an annualized basis. This is clearly a growth killing development, and that's really where I think that's probably the main reason why we are starting to see oil prices stabilize, and have stabilized now, still within a wide but narrowing range. We're seeing these daily moves. Yesterday again close to $8 range. These are historic and unprecedented ranges that we've seen now on several occasions since the war broke out. And it just also highlight how increasingly difficult this market has been for traders and for producers and consumers to deal with. But the road to stabilization is unfortunately a road towards lower growth and lower economic activity, high inflation, and rising interest rates. And that it will eventually have a curbed demand to the extent that we will have a more balanced and therefore also a more stable market. But I think having watched this oil market for so many years now, it's quite often we are looking at these price developments based on a few 100,000 barrel changes on the either supply and demand side. Suddenly now we're dealing with millions of barrels. We got saw a report 2 million barrels right now in China. We got Russia where they're selling their oil nearly $40 below Brent. Clearly not because demand is not there, but because many regions won't buy it. And at the same time, we had the Libyan outage as well, taking 500,000 off. So it's just it's a big numbers game right now. But overall, it's as you said, we are heading towards a middle point here in the 105 to 110 area.
Right. Okay. So 105 to 110. That's your kind of best guess, is it?
That's at least what the charts are telling us. That's where the pivot area we've been gravitating towards. We're looking for in our outlook for the second quarter, which we put out a few weeks ago. We were basically put in a 90 to 120 very wide range. I think there's still some risk that if these growth numbers still start to come in, we could still see some weakness. But generally, this market is still one that is mostly worried about a sudden renewed spike. And as you mentioned, the potential for Europe banning imports would have such an impact. I don't think it's going to happen. Germany is completely stuck in this mess here because they have completely let themselves let their guards down, and they are so dependent not only on gas but also on fuel supplies from Russia. So we're probably not going to see an outright ban, but I think across the region we are seeing increasing attempts to over time to wean ourselves off Russian dependency.
Okay, I'll come back to Europe a bit later and see what they might seriously be able to do. But let me head back to this part of the world, my part of the world. I'm in Dubai. And let's speak to Walter Simpson, Managing Director, CC Energy Development of Oman. Walter, Oman isn't the biggest oil player, energy player, but it punches above its weight in energy diplomacy, doesn't it? As a member of OPEC Plus, and sometimes as a bridge between the big producers of the Gulf and Iran. So give me your view there from Oman on the overall situation and how it's viewed there.
Well, good morning, everybody. So look, it's a good question, actually, Frank. And Oman does punch above its weight. And I think that's a reflection of the diplomatic status it's taken for the last 50 years around, making sure it stayed in communication with all of its neighbours and kept relationships going with them. We still have the longest serving oil minister in the world, who's been familiar with all of the players in OPEC for a very long time, and that's certainly helped with the relationships. So yes, they put themselves in the centre of the diplomacy in the region and maintained that position very effectively. In terms of the production at the moment, look, I feel as though we're at the top end of what can be delivered. I do think the supply side was topping out in this region. I know there are talk of excess capacity, potentially in Saudi, potentially in the UAE. I'm not sure there's very much of that left. So I think the demand changes are probably not a bad thing. Otherwise, I worry about seeing the oil prices escalate dramatically, even above where they are now. So from an industry perspective, where they're sitting at the moment is very good for us. I wouldn't want them to go much higher than they are, to be perfectly honest. I think that creates problems. But sitting around the $100 a barrel mark, that's good for us. Realistically, it's probably still a little bit high in my view, but we just need to see where that goes. Okay.
Well, if there isn't much capacity in Saudi Arabia nor the UAE, the other big pool here, of course, is Iran. What's your take on that? Will that come back anytime soon? Will there be a deal?
Oh, yeah, that's a very good question. Look, I'm not sure the deal side of it is the real decider, in a sense. Like, I think they're managing to sell oil at present. They're still trading with certain parts of the world, and the US is getting more relaxed about them trading extra oil as a result of the challenges with Russia. But I think the bigger issue is actually how much can they really produce? Investment is hugely important to keep oil production going. And in Iran particularly, has suffered from a lack of investment over the last few years. And therefore, what can they really produce? And I'm not sure any of us really know that at present. And if they were to get a deal and open up, I suspect a considerable amount of money would have to be invested, and the time taken to do that before Iran could get back to significant levels of production. What was it, about 2.5 million barrels a day when sanctions incurred? I think it'll take years to get them back to that level. Personally, it'll take time.
Okay. Let me go to Victor again. I want to get some kind of feel for how China is viewing the war in Ukraine. We saw dramatic headlines yesterday on Bloomberg. Russian oil exports fell 25% in a week last week. Sorry, in a week at the beginning of the month. So this would seem to suggest that Russian sales to China are not happening at the rate that we thought that they might, and possibly also India. But Victor, tell us, what's the Chinese view on this now? Where does China stand? It was a neutral or a backer even of Russia. What's the feeling now?
Well, the position or the feeling, the sentiment in China has not changed. It has been mediating between the two parties, and it's not supporting any other party. Say right from the beginning, it has been pushed for talks between the two countries, and so has been trying to get a peace agreement between Russia and Ukraine. Well, there has been a lot of support in the West about China supporting Russia, but which side is supporting? No side is actually supporting. Say, just like when the two parties are fighting, can you have one side against the other side to make a peace agreement? No, that's not the way. And so the sentiment is, saying in China, we do not join the West wagons by condemning Russia's invasion. Because, say, if something similar happens to the United States, say, another country is going to, install missiles in front of its doors, what would the United States do? And what did the world say or do when the United States invaded Afghanistan or other countries? So this is not going to help whether to condemn Russia or not.
Okay.
What should be helpful? Yes.
I think the West has a difficult sell with this story in view of the history with Afghanistan and Iraq, and that's probably the biggest obstacle it faces when it tries to get global support for it. But let me go back to Ole, please, and the issue that you raised earlier, Ole, about European enthusiasm for taking action against Russia as a punitive symbol, if you like, but also as a very practical way of depriving Putin of funds. Russian oil exports fell 25%, but the ruble, it seems to me, has this kind of status symbol level within Russia. And that has stayed high. That is back to where it was before the invasion. Now, I know that there's been, capital controls and market manipulation. But do you think that the ruble will eventually feel the effects of the economic slump that's coming? We saw 15% contraction in the economy. Will the currency reflect that? And will that make a difference to overall Russian attitudes towards the war?
Well, I think, as you said, Frank, it's the currency has been manipulated, and it has been propped up by restrictions on its availability for trading. And I think that will probably be maintained. Russia is still there's still a net import of dollars or hard currency that they can exchange. So we're probably not going to see any major drop off, I would imagine, in the ruble, similar to what we saw when the war broke out. So and that obviously also has led to some of the upgrades in terms of, or the less severity on growth forecast that we saw initially, because the ruble hasn't fallen out of bed. So it will be propped up and supported, so that's not where we're going to see any major change from. Europe wants to punish Russia. There's no doubt about this. But at the same time, we also have to accept the fact that we have fallen asleep. We have not listened to seen the signals that has been sent throughout the last few years from Russia and their intentions. And so it's a wake up call, and it's one that's going to be incredibly expensive. But it's also one that's going to ensure that we will move faster towards the less dependency on Russia, both on the oil and gas. But in the short term, I don't think the gas situation is now under control, at least for now. But the winter prices for both next year and the following year are still very high. It does indicate that the market is still concerned about the level of storage that we will have at the end of this injection season. Are we going to receive the LNG quantities that we need? That really depends on Asian demand as well, because we are in a competitive world. So the gas will go to where the prices are the best, and we have been very competitive because of very high prices. But that obviously can change if Asian demand starts to pick up again. On the oil front, again, it is really a question of whether we are prepared to pay the price at the pumps in our homes for the goods that we need to buy that are produced by energy. And I think at this moment in time, I think it's still one that where it will happen, but it will happen slowly over time.
Right. Your little anecdote at the beginning when you spoke about turning down the thermostat, was that just an anecdote, or is that the sort of popular sense? Are people consciously doing this in order to hit Putin?
They are indeed. I was at a conference yesterday, and I spoke to one of the guys who represent the main distributor of gas in Denmark. And although it's anecdotal, they are, because obviously weather is the main impact, the level of temperature. But they do believe that it is starting to that there is that it can be felt, or they can see the small change. So. As one of the UK supermarkets says, every little helps, and that's what we are. Well, that's what we are seeing on that front. But in order to make a massive change, then probably prices need to be higher still, because that's really only when we start to react to these developments. But again, inflation has suddenly come back with a vengeance. I got gray hair, so I still remember I was a kid in the 70s, a child in the 70s, but I do remember the kind of punitive interest rate my dad was paying on his loans. So that is not coming back to that. We're not coming back to that extent, but nevertheless, we are seeing less spending power in Europe starting to emerge, and that will obviously have a negative impact on growth, and with that also demand.
Right, Ole, and briefly, Germany seems to be at the crux of this. What's your view on German attitudes? Will they actually bite the bullet and take some action?
Well, they need to get their act together. Too many people have been in the pocket of Gazprom for years, and that needs to change. And so far, we are seeing signs, but we are not seeing. I think still we need a lot more action on the ground. But Germany has put themselves in a very, very tough situation because they left the guard down completely. They are very, very dependent on both gas and fuel products coming in from Russia. So they're probably going to be the main major opponents towards imminent action. So that's also, I think, the reason why it will something that will gradually happen over time, but it will happen, and it is happening already.
Right. Let me come back to the Middle East, and if there is any kind of silver lining to this for those of us living in the Middle East, we are actually living through quite a good time here. Saudi Arabia's economy is growing at its fastest rate in a decade. Oil output, soaring prices, but the non-oil economy is also growing strongly. In the UAE, where I am, real estate markets going gangbusters. Stock markets are still devouring IPOs like crazy across the region. Walter, I want to get some kind of sense from you, because this will lead us into our question. Do you get the feeling that the Gulf, well, the Middle East and the Gulf in particular, has effectively broken away from the global economy in the midst of this?
I think it has, but I think it's because of the high oil prices. So that has given them the opportunity to reap the benefits of the reward that comes from those high oil prices. I think the challenge they've got is more to do with where do you invest that money? And there's some choices to be made. There is a recognition in the region, I think, which has grown really strongly over the last 2 years, that diversifying the economies is going to be hugely important. If hydrocarbon revenues in the future are going to drop, there's got to be something else to keep the economies running. So that has become a much more important part of the thinking of the governments in the region over the last couple of years. And I sense that significant investments are being made in certain parts of the region. Clearly, Saudi Arabia is investing hugely in diversifying the economy, building new cities, advocating the tourist trade, etc. Dubai has been working very hard on that for a number of years, but Abu Dhabi and the UAE as a whole is working on that as well. Oman is investing in different parts of the economy to try and get the diversification there. So I see that happening across the region. And I think it's a very good use of the windfall that's come from the additional oil dollars. They could have all been invested back in the oil industry. And while that would be a short-term big gain, I think it's this diversification that becomes important. And actually, I believe that's an important message for all of us in a sense. Let's make sure that this boom from the petrodollars that the big companies and ourselves are getting is invested wisely and not pushed away.
Can we just pull up the question, please, today, which reflects that kind of debate? With rising oil prices and strong stock markets, the GCC has effectively decoupled from the global economic gloom caused by the war in Ukraine and soaring global inflation. And that's a single choice. Either you agree or you disagree with that. I guess if we had longer, we could debate whether how long that decoupling, if we agree that there is a decoupling, how long that can continue. But let me go back to Ole for some thoughts on coming days. We are 2 weeks away from the next OPEC Plus meeting. Do you expect that to be business as usual, Ole, or might there be any surprises?
I think OPEC Plus meetings have become irrelevant for now because there's a big elephant in the room called Russia, which is not to be mentioned. So that's why they keep the steady line by announcing production hikes which they cannot achieve. Really, only the GCC countries right now are fulfilling their quotas. Most of the others are struggling. And again, as you mentioned earlier, lack of investments is being one of the reasons, not only in Iran, but also across some of the OPEC members. Russia's production and exports clearly falling off a cliff. That is not being mitigated by additional barrels from some of those that has spare capacity, and that probably makes me believe that that spare capacity is potentially not as high as we were led to believe. So OPEC Plus meetings, not really. I don't expect any rabbit out of the hat. As I said, they're more concerned about staying together than keeping the global market supplied.
Okay. Victor, how close? I'm sure that you watch OPEC Plus meetings very closely because you're an oil industry expert. But how closely does China, in general, watch the deliberations of OPEC Plus?
Well, for us, oil prices matters a lot too. And surely nowadays, production is not actually a great issue. It's just the concerns about production, actually. Well, if we look at the supply and demand, maybe we can feel that oil prices are driven more by the supply concerns, instead of by the capacity to produce enough oil for the world.
So it's all about supply from your viewpoint, is it?
Well, I mean, supply, you can say it's an issue, but it's not the biggest issue that causes prices to spike. It's mostly, sometimes it's about the fear about supply, about the sentiment that drives up the supply. But of course, from my point of view, the OPEC Plus could boost its production to slow down the growth in prices. But okay. Yes, that's it.
Can we pull up the question results if that's possible? Quite a large majority there agrees that the Gulf region has effectively separated itself from the rest of the global economy. That's probably good news if you're living in the Gulf region like me, but not so good if you're in the rest of the world. But that's rather interesting, I think. So we've run out of time. I'm very grateful to the three of you, Victor, Walter, Ole, for an interesting discussion. There will be lots more of this, I'm sure. So thank you all very much. And Sean will be back tomorrow, I believe. Thank you very much. Goodbye.
Thanks very much, Frank. Thanks, guys.
Bye-bye.